Have you ever tried perpetual trading? I have, and let's say it wasn't a huge success. Today, we're discussing with Stephan Lutz, the CEO of Bitmex, the OG company when it comes to this innovation. From technology to regulation, we discuss many topics. Come with us. Hi Stephan, thank you for being with us. I know it because I read it. I know that you don't like speaking of your personal background, but would you mind sharing a bit of your personal journey?
Of course, you're welcome. So I'm with Bitmex now for 5 years. I started as CFO, took over CEO position during the last crypto winter. So it's quite interesting to be here today because we might head into the next winter. Before that, just in brief, it's oversimplifying, but basically 1 decade of being a PwC partner, headed their capital markets department there in Europe, but as an advisor, not so much as an auditor. Before that, not definitely, but like 10 years Deutsche Börse, so stock exchange, Europe's largest stock exchange operator, operating the Eurex brand, which is basically connection to Bitmex. We're pretty much alike. And before that, 10 years in banking, right? So I started in banking.
Being from traditional finance, what brought you to digital assets?
That is the fun story in a way, because it's not that I changed to digital assets, crypto, whatever you want to call it, like only when I joined Bitmex. I started looking at that more or less in 2015, so way before I made the professional move. Because I spent a lot of time in Southeast Asia, I looked at financial stability matters for central banks. I looked at today you would call it financial inclusion. So how can you bring more people into the banking system? And I realized what the problems of bringing people into the banking systems are around the globe. Coming from Western Europe, you usually don't think about it. Everyone's got a bank account. It's not an issue. Here it is. I mean, not in Hong Kong, not in Singapore, not in Japan, not in South Korea, but everywhere else basically. So I started looking at blockchain technology. I came more from the blockchain angle, not so much from the Bitcoin angle. Via blockchain, I learned, of course, about Bitcoin, which was already running for a long time then, and then getting myself involved in that. And when Bitmex asked, it was basically to the surprise of everyone that I said in basically 3 days, yes. Because I knew Bitmex, I knew the digital asset space, I knew exchange business, I knew finance and compliance. So, and I wanted to get my hands wrapped around this thing professionally anyway.
Bitmex's own story is fascinating as well. Could we say this is the platform that has invented perpetual trading?
Yes.
How much did it impact, according to you, trading, especially because Bitmex has always been open to retail audience? So
I'd say, and I had no share in this, this was our founders doing, right? I think it cannot be underestimated how much impact Bitmex had on the crypto space. And I tell you why. Yes, it's known for being the inventor of the perpetual swap, which is a financial innovation. Frankly, the concept of perpetual swaps is quite old. It came from the 80s, but it was never implemented. And what do perpetual swaps do? They enable you to participate on the exposure of a certain asset. It doesn't matter whether it's digital or not, with a way higher capital efficiency. And this is why it was appealing to retail investors as well, because it reduced the amount that you need to deploy. But for me, that wasn't the whole thing. The whole thing was this combined with an actual pricing / funding mechanism that brought longs and shorts together. Because if you're in an upwards market, everyone wants to be long. In a downwards market, like now, everyone wants to be short. So, but you need to have a matching order book. And they came up with a funding mechanism and with a pricing that enabled that longs and shorts will be balanced. So you pay incentives to the opposing side, which has been copied by everyone as well. And then the third one, which I think even is the second most important, is the insurance fund mechanism. So how do you enable counterparty credit risk less, not free, but less trading? In TradFi, you have a clearinghouse. Because of the clearinghouse, and you need to pay into the clearing fund, you need to provide capital for the lines of defense, you need to agree to certain mandatory contractual obligations in terms of a crisis scenario. Only big institutions can become clearing member and therefore can trade on an exchange directly for derivatives. In crypto, this has been solved and you have basically equal access for everyone without compromising on the level of protection on counterparty credit risk. We could speak 1 hour about that. But that was the second most important thing. So perpetual swap, insurance fund mechanism, and the third one was actually providing, which nowadays is not an issue anymore, a trusted wallet solution. If you look back like 11, 12 years, fraud was a thing. And hey, are the coins still there? So one of our main slogan is never lose the fucking coins, which just means make sure that it's there. What does it mean? So our assets, if you trade on Bitmex, your assets are completely segregated. We don't use an omnibus account structure. House funds and customer funds are strictly segregated. If they're not segregated or coins are missing, we have basically an audit that runs every couple of seconds. The trading engine stops or would stop, right? So it means it's built into the system that we could, it's not liquidate in the way it's usually meant, but we could close the exchange basically every minute and everyone will get their funds, which is different because we don't rehypothecate, we don't reuse it for something else. It's not flowing out of the exchange, which is quite different to many of the other models. It reduces the level of passive yield you can get, but it increases the security and safety level like by far. Those things together were actually the innovation. And it has been copied, not in all ways, but in many ways by basically all of the crypto exchanges out there. So it's not about Bitmex, it's about the industry, and they brought something to the industry that no one else had before.
I can compliment with what you're saying because I remember Bitmex has always tried to be a bit more advanced than the other platforms especially when it comes to technical developments. I remember I learned about batching transactions with Bitmex. You implemented Segwit as well quite quickly. How much is it important as a platform to be that much advanced, especially when it comes to Bitcoin itself?
This is an evolution. So it is important. I don't want to diminish this. What do I mean? You basically, from our point of view, need to be at the forefront of technical capabilities. These days, it's something else, right? These days, it's about throughput, latency. For institutional customers, not so much for the retail angle, but rate limits is a thing. So how many orders can you put through the system per second or per minute? We have, frankly, no limits on this one. Of course, there are always operational limits, but we managed it that at that current point where we are, we don't issue real limits. We offer more like, okay, this is a guidance. If you go beyond this, you might see more latency, but we can work on this, right? So this is one. Going back to what you said, if you go back 12 years, that was a differentiating factor, right? Because the industry was still evolving. With the maturity of the industry, especially on Bitcoin, it is still the fundamental layer of everything you do. If you're not good at that, you won't prevail. And you see that in the industry. You see all the big exchanges these days, they can all manage this in a good enough format, right? If you come in and you don't want to do it, you will be eaten alive. But the differentiating factors these days are slightly different. Back then, those innovations, together with the technical capabilities and ever evolving, was a differentiating factor that made up like 100% of your USP. These days, this is an industry standard. So everyone knows the industry standard. So the competition these days, it's way more on the commercial side. It's about winning market share. It's real competition, not on the technical level, it's competition on the commercial level. And this is what you see in the whole industry happening like for a couple of years now. Yeah.
The competition has expanded now. How do you manage to keep your market share?
Not difficult question, but this is the holy grail, right? This is whether you make it or not. The issue is we still see, as we spoke about it, this fundamental layer as our main, not differentiator, but this is basis for everything. So we still look at technology day in and day out. The majority of our people in the firm are engineers and technicians because we don't want to lose this. On top of it, these days it's more about structure. So if you look at Bitmex, very original, OG, you could even say degen in a way. But the thing is, crypto native, Bitcoin native, Bitcoin maximalist. We want to keep part of that because that's why Bitmex was founded. But at the same time, we acknowledge the industry moves forward or has moved forward. If you look ahead like the next 3-4 years, we see now TradFi institutions joining the space. And they have a different mindset. I mean, even if we're the best technologically, they look at rubber stamping via licenses, regulatory approvals. Whether you really need them or whether they really add something is a completely different matter, but it's there to stay, it won't go away, so we need to play along those lines, and this is where we go. Where we see ourselves differentiating is not so much as of today, but going forward, being the bridge between TradFi institutions and kind of the DeFi world. Why do I say this? If you look at how TradFi does business in trading, they are ring-fenced, permissioned. They look at more external certificates than how your business is run. So everyone asks like, what's your license? Can you provide me with certificates? Can you provide me with whatever? But it's a paper exercise. Whereas crypto native ones look at what's your smart contract? How is your wallet working, etc. So you go technically, right? And you need to be able to combine both. That's number one. So you need to adapt slightly to the new world, but without compromising on what has been achieved on the crypto side. If you then look at retail is these days going more into the decentralized exchanges, right? Non-KYC, etc., etc. Great UI, frankly, great risk taking, cool stuff. But we believe if you're sensible, you can be dogmatic about it and say, I like this one world and not the other, or the other way around. But I think unideologically, the holy grail will be, how do you tap into the insti side that's coming in, and how do you connect it to the original retail demand? And this is where we want to be, because we come more from the individual. I mean, retail is a regulatory term. I say more from the individual traders' demand, like this democratization. I don't like the word anymore, I have to say, because it has been misused so many times. But like taking out the intermediaries and giving you direct access, right? So if you want to trade on Eurex, as an individual, you can't. You just cannot. You have like 2 to 3 intermediaries in between. We want to keep that you are able to trade directly, but we want to connect with the liquidity and the firepower of the institutions that are coming in. So we're working on licenses, we're working on off-exchange custody, we're working on integrating self-custodial wallets. But as well, we work at the same time on how can we have a better experience for retail users, because they don't want to have a Bloomberg terminal from the 80s, right? They want to have something new, something sleek, something easy to use, which actually is kind of, for us, the difficulty. How do we reduce complexity without losing information that's necessary to trade?
Speaking of the elephant in the room, since you seem to move more toward a decentralized platform, Hyperliquid was a great success of last year. Since they enable anyone to build on top of it, could we imagine like a Bitmex version built on top of Hyperliquid?
On the one hand, we need to look at them as competitors, right? Because for retail individual traders, it is a choice. Do you want to go to Bitmex and trade perpetual swaps there, or do you want to go to Hyperliquid and trade perpetual swaps on Hyperliquid? And to be frank, the benefit on Hyperliquid is it's a great and easy UI. You have no KYC, which eases the onboarding process. You can onboard, offboard whenever you want, right? And they have a great incentive scheme. So actually it's kind of a virtuous, as long as they grow, it's a virtuous cycle. If they would shrink, it would be a vicious cycle. But great stuff. And you had that before with other DEXs, right? Or with other decentralized platforms. So I'd rather look at it with great respect for what this team built. Like whether Hyperliquid is the one to stay, I don't know. Maybe they are. Maybe they are here in 10 years and 20 years time too, right? But the concept of a DEX will stay. Which DEX it will be? TBD, right? Not in a bad way. It's really like, I have the greatest respect, but it's because it's dependent on ever increasing incentives. This is the only thing where I'm like, I'm not quite sure how this will play out, where we are more stable business. So I would say it is competition on the one hand, because we need to provide something to our traders that they still stay with Bitmex or come to Bitmex instead to Hyperliquid. At the same time, I believe we're playing in a completely different space. On Hyperliquid, yes, institutions try to access this as well, but it's a completely different game. If you want to combine this, let's say, old TradFi world with, it's not so new anymore, but the crypto native guys, Hyperliquid cannot do it. Right? Hyperliquid cannot go to a licensed business model without compromising everything they built. This is why they operate as a DEX, because they didn't want to compromise on UI, UX, ease of use, no like frictions in onboarding, completely permissionless access, so to say, right? So, and providing those incentives, which are not allowed under some licensing regimes. And we believe our sweet spot is there, because we have been built, and founders have basically built a professional institutional platform that should be open to individuals. We just recognize that it's shifting a little bit from individuals to institutions these days.
You have listed tokenized assets on Bitmex with equities or the commodities. How much do you think that tokenization is going to affect the industry?
A lot, and B, I hope even more so. And what do I mean? What we see in terms of tokenization now is an interesting effect, because we go for the assets that are the easiest to be tokenized. What do I mean? An equity is already something tokenized or fractionalized and even dematerialized. So if you think about an equity is partial or fractional ownership of a company, which has been dematerialized, so there are no certificates anymore, like in the 90s and 2000s. So it is a wrapper. And now crypto provides a wrapper of a wrapper. So it's easy, right? So it is dematerialized, a wrapper already. It's not the real asset. And now you provide something on top of it. Pretty easy. It's fungible. It's basically universally convertible already. And even legally, if something goes wrong, if there is a dispute, this has been battle tested multiple times. This is why we go for, let's do equities. I mean, not like Bitmex, but the whole industry. Let's focus on equities. Let's focus on bonds. Let's focus on deposits, right? Maybe private credit is a thing that comes next, and some commodities. Because it's easy, you can do it. And this is the thing that changed compared to the last cycle. The crypto natives want to diversify their portfolios and de-risk it. Once you have built wealth, you want to maintain it. Last cycle still was, hey, don't talk about equities. It's boring. I want to have that meme coin. I want to have that NFT. I want to have this. I want to have a 10-bagger. I want to have a 100 times return, right? The guys that have made some wealth now say, you know what, well, 5% return on treasuries is okay, which is quite funny if you think about it. But this is why it works. So what we do is we integrate TradFi in the digital native technology. And this is what we see right now. The holy grail will be the next one when we are able, which is still a way to go, to tokenize buildings like this. And I mean directly. The UAE, for example, is leading the way with how they allow title transfer in a completely digital way on blockchains. You don't need to go to your notary anymore and have a document or so. So you don't need a wrapper of a wrapper of a wrapper. So it's number one, but there are still some legal issues to be battle tested, I would say. So actually, what happens if you have a default? What happens if you have a legal dispute? How can I maintain my legal posture, right? All not clear yet, especially on a cross-border basis. And this will be the holy grail. So I think maybe we speak about this in 3 to 4 years' time, because there is still some need for regulators and lawmakers to enable that. So again, UAE is taking the lead here. If they will be successful, it will be copied. So, but to date, I think we will concentrate on TradFi assets being brought on-chain. Yeah.
Regulation of trading is constantly evolving, especially in the US right now. Do you expect something from the CFTC recent request for comment?
Well, I expect that the US, which is a general theme, will be more open for business, right? If you see the request, if you see the legislation that's coming out, if you see how they behave, it means not that there is no regulation anymore, but they go from, especially in the digital space, but in the usual banking space as well. So from a concept of something is only allowed if it's explicitly allowed and what is not allowed is forbidden, to, hey, if it's not explicitly forbidden, you can do not whatever you want, right? But you can try. That's number one. Number two is they really want to, my view, that's an interpretation, personal view strictly, they're on a mission to overhaul their actually TradFi infrastructure. If you look at many of the stablecoin projects, it's not about, sorry to say, it's not about stablecoins. It is about integrating blockchain technology as the underlying settlement mechanism for financial transactions, which is way bigger than a stablecoin. Yes, it looks like a stablecoin because you need to have something and it needs to be US dollar denominated, so it's called a stablecoin. But actually what it does is they replace their back-end infrastructures. And the US is, financial industry is in desperate need of this. They are like decades behind even Europe. And this is why you have that discussion why Europe is, I mean, they are not anti-crypto, but they are way more cautious because their problems in the traditional financial space is less than in the US.
There's something that is really overlooked when it comes to Bitmex. I think this is like your research department first, and also the fact that your grants given to Bitcoin developers. Yeah. How much is it important for you to stay close to the core of this ecosystem?
It is important. Frankly, it doesn't provide a real ROI.
Of course.
This is more to recognize where we come from and still keep this channel open as a two-way street, right? I mean, Bitmex founders were basically Bitcoin maximalists. And they, in a way, still are. I mean, they recognize and acknowledge what's going on. This is why they allow and they want to pivot or adapt. It's not a pivot, it's rather an adaptation to the situation. But as this is close to their heart to provide choice to people who want to be their own bank, right? I mean, that was a slogan of Bitcoin in the early days, like be your own bank. It's not for everyone. My mom doesn't want to be her own bank. I might, because I come from the industry and I love it, right? And providing that choice, and this is why we are still close to that, and we keep those channels open to not forget where we come from and always remind ourselves, hey, why are we actually doing it?
Bitmex celebrated its 10-year anniversary 2 years ago.
Yes.
How do you foresee the rest of the decade?
That's an interesting one. And honestly, we don't know. And I don't mean that in a way like we don't care. It's more, I come from TradFi, and in TradFi you have cycles of basically 5 to 7 years, and your average budgeting cycle is like 3 years, so you have 3 years plans. I would say in crypto, you maybe have 12-month plans and you adapt after 6 months. So, but what is here to stay, I think, is number one is that RWA thing we spoke about. So now like getting more and more financial assets on chain, definitely a thing, will be probably a thing for the next 18 months. And after that, the next cycle going into real RWA. And the other thing is that everyone spoke about it. Everyone said it's there already, it's not. What do I mean? That traditional asset managers will allocate parts of their funds to digital assets. You had the ETFs, but the ETFs are not really allocating money to it. That was a completely different play, and it's a pure play, right? I mean, it's like a commodities ETF. Or you can buy Bitcoin outright, frankly. If you really want to have Bitcoin, buy it outright. Don't go via an ETF. It's for different people. But the moment pension funds, usual actively managed funds, add crypto or digital assets to their portfolios, that will really make a difference. They're not there yet. We all speak about it. They're all interested. They're all on the sidelines still. They wait for some licensing. They wait for some clarity internally. They waited for actually what happened in the US. They will wait for Europe to adapt their stance on crypto, because it's very much separated still. So you have MiCAR, which is for spot trading, but MiCAR and then the rest, and it doesn't interact with each other. Once that happens, it will unlock, and I think then we will see an explosion of trading volume. So I'm a little bit cautious. I know it will come. I'm very much convinced about that. But I think this will drive the next, call it crypto summer or Bitcoin summer. It's more about Bitcoin these days, right? It's Bitcoin and the top 5 level ones. That's it.
Thank you, Stephan.
Thank you very much.